We're here on the CAD yen on the 5 range, and this is a low and tight flag that's set up. Directional move lower, structure being adhered to at the bottom and the top. We have a minimum of 2 touches either side, and we have structure being held. So what I am going to do with this is the higher time frame, because low and tight flags for me are very profitable if traded correctly, and I have very strict rules for these to make sure that I only take the highest quality trades, and I'm going to run through them now. So here on the dailies, we have had a break above, close above, which was this candle here above the structure level, but it came straight into another structure level where we're currently seeing a rejection from that zone. Now this is what really interests me. Whenever we see big momentum candles like this or a heavy trend, this is where we get breakout patterns that occur, and a low and tight flag, as in this scenario, is just that. It is a breakout pattern. So with this candle tells us that compared to the rest of the chart, there's been more momentum in this candle, in this 4-hour candle, than at any of the other candles. In fact, if we zoom out, the only one probably was that one, and that's going back the last few weeks. So this is a big momentum candle, lots and lots of sellers up at that structure level on the dailies, and we're seeing a great big lower low, lower close candle. And do we have room to come lower based off that structure level? Yes, we could actually come all the way down to this level. So that's my first signal. If we drop to the 60, my second signal is that we have a directional move and sideways movement. Whenever I see sideways movement, I always think flag. Let's go and take a look now at the 15. Now here on the 15, this to me, it isn't valid, but well, you could actually have another low and tight flag forming right here. And again, for any pattern that has trend lines, we're looking at 4 touches. That's 1. That would be 2. If it comes to here, that'd be 3. You'd have to wait for a 4th up here and a shorting opportunity for it to be valid. Let's drop to the 5. Here on the 5. Pretty much the same thing. 1, 2, 3. However, here on the 5, you do have your 4 touches. Now, a question I very often get asked is, how do you know this isn't a double bottom? Because look at what it's doing right here. It's going higher. Double bottoms are, for me, the most profitable after a major rally. Well, the first thing is, double bottoms require RSI divergence, and for it to be oversold. Do we have that? Yes, we do. So then how do you know? Well, it comes down to structure. This line right here is the structure line. If we look left for structure, and we need it to be major structure for a double bottom, because after all it's got to hold and turn at that level, then there is just nothing here. You have a touch here, you've got nothing here, you've got nothing here, and what you're looking for is you're looking for those tests that come up and bounce straight off it, maybe even violate, pull back, hold and continue up. That's the type of structure you're looking for, and just here we don't have that. So when we don't have structure, I automatically turn to, well, could it be a low and tight flag? And I do need it to be very directional, or for us to be in trend for that to happen. If we go to the 5 range, we've actually got a very nice view of it here, and this is where I saw it originally. A very directional move, again structure being held with that trend line, and again, just to repeat, 1, 2, 3, 4. We know we have room to go lower, so we draw a fib on from the lows to the highs, from where I believe the start of the pole is. Always want to keep the charts nice and clean so that we do not hide price in any way. And we're looking for that 127 fib. So if we bring back on the orders, I have gone an ATR above the high here, which is 5, let me just double check that, 5 pips. I'm going to give it an extra couple, and I'm playing for that 127 minus 2 pips for front running. So we're looking at 16 pips of risk for a nice 23 pips of reward. We're back for the update. My alarm has just been triggered and we have come a couple of pips to within target. So I'm just going to go ahead here and move this to almost break even, just so that we can see the actual figure. So this low and tight flag, we was correct with our first touch, our second being here, our third being here, and then our fourth being there. And then it kind of threw a spanner in the works. Could have made you get a little bit jittery because it came back up here for this other test looking like this. Thinking, uh-oh, this double bottom is actually going to be a double bottom, and then broke to the downside. So this is why it's really important that we follow the rules defined for these patterns. Just like if it was a back pattern, you have certain fib ratios that must be met. For me, I have certain rules that must be met in order for it to be a low and tight flag, and I went over those in the first part of this video. So I'm actually front running by a couple of pips here. We've got 1 pip to go, but I'll have to spike past this by a couple of pips, so it is looking like this is going to be for about 23 pips, something like that. Okay, we're back. We're spiking through the order now. We got up to 22 pips, didn't quite take. We'll just give this a second, see if it just spikes through and see if we can capture this thing hitting. Not caught one of these trades hitting in a long time. Okay, 22 pips up again, still spiking through. Still hasn't taken. We have to wait patiently. We've now had the 5-minute candle close. It's actually closed, making a new low. More indication here that we could see just a little bit more downside. Okay, and we're back. It didn't actually push down any further. I think the fees got a little bit less, and it actually took as a result of that. So there we go, 23 pips banked. Beautiful example of a low and tight flag.